When I started my trading journey, I was looking for the best possible strategy that was easy to execute and understand. And I tried countless strategies and indicators, but I continued to fail. It wasn't until I found this simple and easy strategy that I was able to turn my trading journey from unprofitable to profitable. In this video, I will be sharing the foundation of this strategy, how to enter and exit using this strategy, and most importantly, I will be showing you a live video of me trading this strategy. The challenge a lot of traders face out there, including myself when I first started, was that there's so many strategies out there and we spend a lot of time forcing ourselves to do what's working for somebody else when even when it's not simple and when it seems very complex. For example, when I started my day trading journey, look at my chart. This is what my chart looked like. This is not from Google. This is I was looking at DraftKings that time. I was looking to get into a swing trade. This is what it looked like. How would I have made sense of it? Like MACD, RSI, so many things, and I was confused. It wasn't until I then started looking deeper, trying to understand everything, the foundation of trading, so that any strategy I trade, I can explain it to a child and it would make sense and I can repeat it multiple times, and with repetition I'll be able to master it. So this strategy now helps me catch strong momentum moves in either directions. I stopped guessing and I have more conviction in my trades. It's more peaceful, it's clear, there's no indicators on my chart. And now, because I have clarity and conviction, I'm able to identify high probability setups and entries. With that being said, now I'll go over the foundation of this strategy. You have to understand the foundation of any strategy you're trading. And the first thing I want to go over is candlesticks. I'm going to be showing you my favorite candlesticks that I look for and where I look for them. Because when you learn about candlesticks, I know some people will show this, like there was this like book that has a lot of formations, and I was worried. I'm like, am I supposed to memorize everything? I know what this means each time I see it? Like, that's almost impossible, because once you put money on the line, you want to make sure your brain is doing less taxing things, not trying to memorize what that candlestick means or looking at a book and saying, oh, that's that candle, let me try and buy, or let me try and sell. But once you understand the foundation and you understand the best candlesticks to look for, and where, most importantly, is where to look for them, and I'll be explaining and showing that in this video, it becomes easier and straightforward to understand. So now, with candlesticks, buyers win when the price opens up right here and buyers push the price higher. Sellers come in, they try to cause trouble, but the buyers win anyway and close the candle high. At that and that candle will close green, means buyers won the fight. The opposite is true for sellers. When the candle will open up here and then sellers push the price, buyers try to fight a little bit, but they end up losing it and it closes red. The market is an auction. Now, knowing that the market is an auction, okay, how does the market move? We trend either to the upside, where you're seeing a staircase effect of higher lows and higher highs, or to the downside, lower highs and lower lows. And most importantly, you always want to look for your candlesticks at areas of interest where buyers or sellers were fighting and one side overcomes the other side. For example, in this trend here, you saw that it was buyers that were winning. At some point, it met resistance, and then buyers overcame the sellers and went higher, and later on it came back to revisit that area of interest. You won't always see the trend move in one direction. Always a pullback will happen, a retest will happen. Now you need to pay attention to, okay, what's happening when we see that retest? Who is winning? Now I'm going to quickly go over the best bullish candlesticks to watch out for at your area of interest. So in the order of strength, it goes this way. So when you see your regular candlestick, that's just a green candle that printed, where you saw sellers and buyers fighting it out and it closed green. And then this second one right here, it opened at the lows and then there were just no sellers. It was just straight up green, and that shows strength. This third one is very powerful because it shows the buyers were able to overcome and flip that candle from when it was red because it opened here, sellers pushed it down, but then buyers were able to flip it back and close it green at the highs. Now, for the best bearish candles, it's the same thing, and you're looking for it at the area of interest, not in the middle of a trend. You're looking at it at the area of interest. Once I finish going over this, you're going to then see the strategy and the setups that I trade within that strategy, and then you would also be able to watch a live trade, and I will show you also another trade that I took, two trades that I took this week using this strategy and everything I've explained in this video. So make sure you stick around and watch it to the end. So the best bearish candlesticks are this one here, where it's just regular bearish candlesticks. Sellers won that fight, and buyers tried here to step up and push the price, but it's still closed at the lows. Same thing here. Sellers just pushed it from the opening print here and pushed it down, and there were no buyers. This one you have where it opens up here. Buyers were like, oh yeah, let's try and push it, but sellers came in strong and slammed it and closed it at the lows. So that's why this one is very strong. And when you see this candle at your area of interest, you know that yes, this is confirmation that sellers are indeed stepping up at this area where I'm watching to see if sellers will come in. Now, with that being said, my strategy is simply the break and retest. Why? Because one, we understand the market is an auction. It trends up or down, and no trend lasts forever. There will always be a pullback to see if we continue that trend or we lose that trend. So why not trade the break and retest, where you see that you're just capturing what the market naturally does in its state? And within the break and retest, I have three setups that I trade, and the first one is the opening range breakout version. I have shared this strategy on my channel, so you can check it out and watch it on how to trade it step by step, and ask me questions in the comments if you don't understand something. And within the opening range breakout break and retest, you have the 30-minute opening range, the 15-minute opening range version, and the 5-minute opening range version. Because I trade the first 2 hours of market open, I tend to usually trade the 15-minute opening range break and retest or the 5-minute opening range break and retest. The 30 minutes is a little too long for me personally. So what I usually look for is to mark the high and the low of the 5-minute or 15-minute candle, and I just simply wait for the break to the upside, come back, retest, and then I look for continuation towards the upside. Or if it breaks the low of that candle, I look for the break, retest, and continuation towards the downside, targeting 1:2 risk to reward. And then this one is my bread and butter. I haven't really gone over this version of the break and retest on the channel. If you want me to do it, let me know in the comments and I would make a special video, and I hope you all watch it. So I draw my key levels on the 1 hour time frame because I found that it works and it just moves level to level. So I wait for a break and a retest of my key level or key area of interest, and then I take the trade to the upside. Same thing for previous day's high and previous day's low version. I have shared on this channel, and I even gave you a cheat sheet on how to trade the previous day's low and previous day's high retest. With that one, I'm looking for continuation to the upside if we are able to get above the previous day's high. Remember, we trend, right? So if we're able to break a high, there's a high chance we continue higher. So wait for the break, retest, and then we continue higher. Similar thing for the downside, wait for the break, retest, and continue lower. And just to put it all together, the first step is just to wait for the direction. You have your key level, you wait for direction, it breaks above convincingly with like strong candles to the upside. Once you see that, you now want to wait for the pullback and look for your entry. Once you wait for the pullback and look for your entry, can you now understand why I was explaining candlesticks and explaining what trends look like? Because once you understand that there's a clear trend and you have your level of interest that you're watching, whether it's the key level on the higher time frames or you have the opening range high or low, 15-minute or 5-minute opening range high or low, or you have your previous day's high or previous day's low, and you know the area of interest, you come into the market with your narrative as to what you're watching, then all you have to do is wait for the direction that you're watching for. Look for that pullback, look for candlestick formation and confirmation as to, oh, a buyer stepping or a seller stepping in, and then you take the trade. So now you have the trend, you have the pullback, you see the strong candlestick that I showed you. Once you see this candlestick, you know that buyers are stepping in. You look for an entry once it breaks above the high of this candlestick, and you look for 1:2 risk to reward. So your entry, stop loss, and target would be something like this. You look for an entry here, and you look for continuation towards the upside, targeting a 1:2 risk to reward, or you can look for a 1:1.5, because if you win 60% of your trades, you will still be profitable as long as you have like a 1:1.5 risk to reward. So that's the strategy. And now I'm going to go over the live trade that I took using this strategy, and I'll talk you through it. So stick around, and I hope you learned something. So coming into today, what I am watching for is SPY above this previous day's high level and potentially 693.43 for a chance to get into this resistance area. QQQ is a little bit weaker. I want to see it above previous day's high bare minimum for a chance to move into 615s and potential gap fill at 616.45. I usually like to watch the VIX just to see how it moves. If the VIX is pretty high and trending up, usually the market will be moving in the opposite direction. I'm watching AMD, but right now it's pulling back down. I'm watching AMD for the break above this previous day's high for a chance to go into 214. I don't know if maybe sellers might be waiting there because that could potentially be a lower high on the higher time frames. As for Tesla, 615s, Nvidia 617s. Markets open. Let's see. So market plays out. Eventually I see AMD setup. I'm just gonna fast forward it. Sorry, Nvidia setup. I'm just gonna fast forward it so that we don't spend 80 years here. Okay. So watching the video on this side of the screen here, watching the 187 break and retest. Very strong name. Wait. Tesla down weak. Not even looking at it anymore. AMD dropping. Let me see Google. I had Google on my list. Oof. Okay. Cut that. Okay, now watching Fridays. I was looking for 5 contracts. See if we get a nice pullback. Retest here. Let's see. Just so I'm prepared. One, two, three, four, 5. Strong candle on Google. First 5 minutes. Very strong candle on Google. Let's see if that close is strong. I'm watching for an entry here right now because based on experience, this price action is very strong. 5-minute candle closed strong. No green candle, no red candle since open. Very strong name. Coming back. Are you gonna feel me? Nice fill. Gonna take off some soon. Nice, Nvidia. Gonna scale now. Sell 3.
Closing order filled.
Nvidia there. Nice. Let's see. Gonna look to take one off. Nice, hitting my targets.
Closing order filled.
One more contract. Let's see, once it hits my target, I'm gonna get out. As you can see, target hits on this, and I ended the day with about $339 on this trade. Finished my day within the first 20 minutes. It was really quick. This is just an example of how you know the level you're looking for. You know that there's a clear trend, and you're able to look for entries based on what the candlestick is doing at your area of interest. So that's one example. Nice trade, nice price action, and I ended my day there. One trade done. So for this trade example, I'm just going to walk you through what I was thinking and how I came up with my game plan for this trade. As you can see on the 15-minute time frame, we were in a downtrend. The market was selling off on Thursday, and I knew we had a gap to fill from last week Thursday, February the 5th, to fill. If we got below this area of interest and previous day's low, which is Thursday. So on Friday, which is today, I'm making my game plan. I'm like, okay, I want to see if we eventually break below this area and we see weak price action, and then I can trade the downside targeting this gap fill level. Now I'm going to go over to the 1 minute time frame, and I am going to play out the tape. So at this point, you can see that we are seeing weak price action. This yellow line is pre-market high, and the yellow line below is pre-market low, and the red line is my previous day's low, which lines up with my key level and key area of interest. And you have Thursday's close, which is previous day's close, right there. So we had now like gotten below the previous day's close. In my head, I'm like, this is bearish. We are also below the opening print, another sign that it's bearish, like price most likely wants to go down. And again, my opening range, if you mark out the opening range, you can see the high, first 5-minute high, and you also have the first 5-minute low, right? 1 2 3 4 5, right there. You have the first 5-minute low. Now let's continue to play out the tape. We have now broken down. Now I'm alert and I'm watching. Okay, I want to see if we have weak price action around this area, and I'll just look to take a trade, and my stop will be really tight. A break above 5-minute candle low. It means that, okay, we maybe want to go back inside the range, or we want to flip trend, and I would target my gap fill, right? Eventually this will be adjusted once I enter, right? So now I'm gonna play the tape. Look at that. So I was able to enter once this candle closed, like got below that green candle for the retest, and my entry was just right there as it got below it, because it was just weak price action. So many things telling me this trade is high probability. Trend was weak. It was below the previous day's low. We were below the opening print. We were below the 5-minute opening range. So many things stacking up in my favor, and also within my area of interest, it had broken down. So I entered this trade and I'm targeting the gap fill, and it does what? Exactly that. It doesn't have to be complicated. Like, it doesn't have to be that hard. And look at that. Within the first 15 minutes of market open, I was done. And then I can go and enjoy my day. So I hope you got value from this video. Thank you so much for watching. I really appreciate your time. I will see you on the next one.